Hey, what's going on, everybody? So in this video, I'm going to go over invoice factoring. My name is Jonathan Federa. I have been in small business lending for the past 15 years. I've helped thousands of clients get close to $500 million in financing for growth. And not only am I going to go through invoice factoring, I'm going to go through what it does, who it's for, how it helps, and all the frequently asked questions that I've got and received over the years, so you understand everything and you can implement it in your business to grow and smooth out any cash flow that you have. So what is invoice factoring? Invoice factoring is simply you're selling your invoice, okay, today. Instead of waiting 30 to 60 days to get paid, you're getting 80 to 90% of it in your account the day you sell it. And then you're selling it for a small fee, typically 1 to 4% per 30 days, right? So it's super cheap and it eliminates the need to borrow on other types of programs like an SBA loan, a line of credit, basically a cash advance, any other type of financing. Because if you borrow any other type of financing, the mechanical challenge is still there that you're trying to solve. Meaning, if you have a $100,000 invoice, or even easier, a $10,000 invoice, and let's say you have really great profit margins, your profit margins are 50%. It still means that you're doing a job and you're laying out $5,000, and then you're waiting 30 days to get that $5,000 back plus the $5,000 in profit. Whereas with invoice factoring, you lay out the money, you do the job, you send out the invoice, and then what happens is you get, let's say it's 90%, you get $9,000 the next day once that invoice is submitted. They hold $1,000 in the reserve, and by holding $1,000 in reserve, as soon as your client pays the factor, they release that reserve minus the fee. If the fee was 2%, then they're going to release $800 to you, and they're going to keep $200 themselves. So to speed up your receivables, 30 days or greater, it's only going to cost you $200. And what that does is it allows you to bring on more jobs and more work, and it allows your business to operate smoothly without any type of cash flow constraints. That's why this program is so popular. The challenge is, if you go to a bank, they don't know anything about it, right? Very few people know about the program, and even less can teach you how to use it and implement it effectively. So let's go into certain things. Who is invoice factoring for? It's for manufacturing, it's for logistics, it's for anything that is business to business. So if you're putting up stickers or graphics for a business, that works. I have people that, if they clean gutters for apartment complexes, that also fits. Anything that's B2B or anything that serves the government. So if you have a government contract and when you complete your work, you get to invoice them, and then you have to wait 30 days or 45 days. If you work for a college or municipality, anybody that fits that bill, you can use invoice factoring. The only time it's challenging to use invoice factoring is if you have progress billing, and there's other programs for that. So to come full circle, even staffing agencies utilize factoring, so they don't have to wait the 30 days or 45 days to get paid. Now, why does it help you grow? It helps you grow because it keeps cash in your bank, so you can take on more work, and so you can take on larger jobs. A lot of times, if you're constantly waiting to get paid, you can't accept new business, or it's tough to accept new business because you have to lay out the money for that. That's why this is so popular. Now, what's the process to apply and what's needed to apply? This is important. So typically within 12 to 24 hours, you can have a term sheet. Once the term sheet is signed, they do an initial underwriting, and it usually takes 2 to 4 business days to get completely set up. Once it's set up, you're good to go, you're in the clear. Now, what do you need to apply? All you need is an application, articles of incorporation, a detailed accounts receivable report, so aging. It's going to show net 15, net 30, net 45, net 60. You need a client list, a sample invoice, potentially a work contract, and a couple bank statements. That's really all you need to get started. Once you have that in a detailed client list, they're underwriting your clients, they're not underwriting you. So it doesn't impact your credit, we're looking at your client's credit. And one of the questions I was asked is, well, if you're underwriting our clients, do they know? They don't know because it's going to be a soft inquiry on their business credit. And what that does is it doesn't alert anything, it doesn't change anything for them, so they have no idea that that is happening. One of the great important things about factoring is it can actually underwrite your clients for you. Okay, so if you have clients that are notoriously slow or some that don't pay, you probably could have avoided that if you had invoice factoring set up. The reason I say that is when we're underwriting them, they will assign a credit limit based on their business credit. So a lot of companies can actually avoid slow pays or no payment or defaulted accounts by utilizing invoice factoring. And the reason is because we're underwriting it. So you can use it as, hey, should I make this client pay in cash? Or can I extend them credit by using invoice factoring or by giving them net terms of 15 or net terms of 30? So that's a big, big advantage. Next, one of the questions we get is, do the factoring companies speak to my clients? The answer is yes, but it's not in the way you think. All they do is send a funds directive letter to the client and then call to make sure they received it. And they actually act as a accounts receivable person in your company. So if it's getting close to that 30-day mark, they may send them an email or send them a call, but they'll follow up on it. And one of the things that I always am asked is, well, what does that process look like? And has it ever burned any bridges with clients? They don't burn bridges because they wouldn't have a business if they did. They're very professional and they actually take a lot of the legwork and headaches out of it for you. So it makes your job even easier. So you can focus on the thing that you're really good at. Next, what if your client doesn't pay? We get this all the time. Typically, if your client doesn't pay in 90 days, you buy that invoice back for whatever it was paid for. So if it's a $10,000 invoice, they're going to take that out of the next couple invoices that you utilize. And that's called non-recourse. They're not coming after you, but they're going to get it in stages or all at once if you choose from the next couple invoices that you factor. And then the other thing that is always asked is, well, what are my clients going to think about invoice factoring? And the truth is most of the bigger companies that you utilize or that you know of are very familiar with it, and they utilize factoring too. That's how they got so big. It smooths out your cash flow and gives you a much easier shot at growing and growing fast because you're not constantly borrowing. If you're constantly borrowing, you can put your business in a less strong position. All right. So if you have any questions about invoice factoring, or you'd like to set it up, or you'd like to see what it looks like, or you have an existing factoring line and you want to see if we can help or we can beat it, please reach out. I'm always here to help. And I hope you got a lot out of this. If you did, please subscribe and share this. And I look forward to working with you in the future.